Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway here at verifiedinvesting.com. So we're going to look at the technicals, the data-driven analysis so that we can use basically logic to determine what levels have a high probability of trading either to the long side or the short side, both on stocks, commodities, as well as some crypto. So first and foremost, markets are basically neutral to positive on the day. Earnings came out the last few days. We have more earnings after the bell today with Amazon, but let's get into the charts and see what the charts are telling us. All right, so first thing, we're looking at the pre-market data here of the SPY. This is the S&P 500 tracking ETF, and what we can see is we closed right here yesterday, right in this general range. So the sideways chop in the overnight. Here's 4 in the morning. Markets were up by then and have faded, but then floated back to the upside. So all in all, we are net plus or positive on the day. Now, you might say, well, yesterday the markets were up a little bit. Today they're up a little bit more, yet Qualcomm's down on earnings. We're seeing ARM Holdings, which is a semiconductor, down on earnings. Yesterday we saw Alphabet down on earnings. So why were the markets able to muster a gain yesterday when certain key stocks were down? I mean, mainly Alphabet, right? And I'm going to show you right here. It's very simple, and this is something I want us all to remember. It's the 10-year yield. So the 10-year yield broke lower yesterday. This is yesterday's candle. Look at that big breakdown right there. And what we know from history is that generally when yields or interest rates fall, the markets catch a little bit of a bid to the upside. And so even though you had bad earnings or not as good as expected from Alphabet, AMD, now Qualcomm, ARM Holdings, and potentially a few others, we're still seeing the markets able to fight that off and go higher because money is getting cheaper, right? Interest rates going down means the borrowing rate for money is lower. Algorithms from the institutions are programmed that when the yields go down, you will see a market that generally floats up. Now, that's only the case now. Eventually, if the economy starts to weaken, and that's why yields go down, that's not good for corporate earnings. But because the U.S. economy is still strong, this inverse relationship right here still holds true. All right, so again, I just wanted to make that point because, again, a lot of people scratching their heads yesterday. Why was the market up? We had these earnings that were down. Now, hopefully, you understand a little bit more. All right, let's go through a few of these other charts here. So number one, looking at the U.S. dollar. The dollar's up a little bit on the day here. I still see this head and shoulder pattern here, which is a beauty that I'm going to continue to watch. Again, it is untriggered. And remember, when head and shoulders patterns are forming, they're good to watch, but until they trigger, there's nothing you can calculate, right? So the trigger line is this dotted line here. It's known as the neckline, and you need that to break, and then you get that bigger likely scenario of the dollar moving lower. Today, it's bouncing just a little bit. And as we saw with the 10-year yield, 10-year yields have broken major support. They're pausing today, but if we confirm this break, I actually think the 10-year yields will head down to here. The question is, what's the culprit? Is it just borrowing costs going lower, or do we get a bad jobs data number tomorrow when the non-farm payrolls are reported at 8:30 a.m. Eastern time? All right, so again, just to set this up, the rest of the day, we had jobless claims this morning. Jobless claims came in basically a little bit higher than expected, which is not a good thing. That's people filing for unemployment, but it wasn't an abnormally high number. Came in at like 220,000 or so. It's expected to be a little bit less than that. So really nothing there. Tomorrow morning, we're going to get the non-farm payrolls report, and today after the close, Amazon's earnings will be very key for the tech sector as well. All right, so let's look at some of these earnings announcements in the after hours. Here's ARM Holdings, which is a big semiconductor player. The stock did dump on earnings. It rallied back a little bit. Now it's starting to head back down. It's really not a huge move. In fact, yesterday, it started its move on the day at around 162.50. It rallied up, and then look where it is. It's almost exactly negating yesterday's move. So if we look at the daily chart and we take a look, overall, we're just basically trading right back down here where it was prior to those numbers coming out out in the after hours. Now, as a trader, there's not much I can do because we're not at a major pivot low yet. We'd have to look for something down in this range around the 145 for me to get somewhat interested in a day trade. Same kind of thing for Qualcomm. Qualcomm initially popped on earnings, then reversed and sold off, trading near the lows of the day. But same kind of deal here is this: it's not down a huge amount. It's down about 4 to 5%, which is not a big move for a trader unless it continues to dump. The one thing I did want to show on this is look at this, guys. And in fact, I'll go to the big board to kind of show you guys this. But basically what we have in this situation is this chart. And I've shown you guys this chart. I might have even shown it before Qualcomm earnings. Here's your flagpole, right? So here's your flagpole. And then from that big drop, you basically started to consolidate, right? And then look at what happened. This is pretty cool. It broke, which is your bear flag breakdown. It chopped around. It retraced into the scene of the crime. So we know that this, because it was support over here, right? So support, once broken, becomes resistance. And sure enough, what ends up happening? Qualcomm trades lower on earnings. Now, listen, that doesn't always happen. In all fairness, earnings are somewhat more of a wild card because not only do you see what the numbers were for the past quarter, revenue, earnings, but you also get guidance, right? And that can really throw some curveballs. But more often than not, the chart is correct based on probabilities. And in this case, you can see again, there's your bear flag, right? Remember flag patterns. Bear flags are right angles like this that are down and like that. There's your right angle. Bull flags in general are like this. They favor that upside while this one favors the downside. And by the way, there's variation. So a perfect right angle of a flag pattern is either a bull or a bear flag. If it's slightly upsloping, what we call that in this business is an in spirit of, meaning it's close to exactly that and it's still bearish, but it's not that perfect definitional right angle of a bear flag, all right? So just a couple tidbits on that to let you guys educate and understand. Now this morning we got some, well, let's go, before we do this morning, let's look at Skyworks. Skyworks is on my radar for a trade today. All right, so again, what do we look for as traders? When I'm trading with the Apex Live Day Trading Room, I'm looking for big moves that are abnormal with good volume because I want to be able to get in and out very easily without any liquidity problems. And I'm looking for major technical supports or resistance levels. So if something's flushing to the downside, I'm going to generally be looking for that bounce. I have to find the technical multi-factor level for that bounce. So if we look at Skyworks, Skyworks closed yesterday around 87 and change. It's trading at 62. That is an abnormally big move. Volume is heavy. If we take a look and we zoom out on this, look at this, guys. So there's a couple levels. I do have a high risk level. All right, the high risk level I don't have on this chart, but I will add it in here. The high risk level is basically 59 and change, this little pivot low right here. The level I will be keeping a very close eye on is this 55 pivot low from 2016 on Skyworks. And again, high risk, still high risk, but this one here has a little bit more teeth in terms of a bounceable level. By the way, do you guys see any pattern on this daily chart that you can recognize? I'm going to flip over to the weekly chart. This will be an extra, kind of an extra credit if you can see this. All right, I'm going to give you guys a second. Look at this chart here. Do you guys see anything? I'm going to draw it in and let me know in the comments if you guys saw it. Look at this right here. What kind of pattern is that? Head and shoulders, right? So there you go. You have your head and shoulder pattern. Oh, well, bear with me as I screwed up my lines here, but there we go. There it is right there. There's your head and shoulders pattern. So again, if you looked at this chart on a bigger time frame, it was giving us a bearish, very clear head and shoulders here. And again, if we want to do, I mean, the target here would be kind of insane because it would basically be at zero. Not to say that this company's going there, but again, this does have significant downside. It's not a short now. It's way too late of that party, but at the same time, it is down significantly. I will be looking for it as a day trade, but that's really about it. I'm not looking for it in this swing trade capacity. All right, Symbiotics, another one, big drop on earnings here today. Look at that drop there. The stock again trading around $26.50. If we take a look at this, I have some old trend lines from a long time ago. Look to me, if we zoom out on this chart, that it's really been chopping here. In terms of support, this low area here will be a major one. And if we draw a trend line in right here, that looks to be around 23 to 22. So right, you see this low, and I can zoom in a little bit. This low, right here, here, right across. That should be some sort of technical support. Again, the stock would still have to fall a fair amount more. It's down at 26, but on these type of stocks, they can easily flush there once the market opens. The key is being prepared for it if it gets there. All right, another stock this morning. This is one I actually traded pre-market. It was pretty wild. I ended up making a little bit of money on it. Roblox. Roblox closed yesterday around $74. It flushed this morning on earnings to $50.70 before snapping back to about 62 here. This makes it tricky because you have this low now that you have to watch. So basically, if this comes down to $50, the even number Pierce, I probably would play that for a quick day trade, but it's still now long. I mean, it's $12 away from that level. Look at the chart, though. You know, when you look at this chart, do we think that earnings expectations were really, really high or really, really low, right? And the way I tell you, the way I look at it is I look at where the chart's been trading over the last month ahead of earnings, right? So basically, if it's vertical, people are like, oh man, these earnings are gonna be so good, which opens the door to disappointment. We've all expected something. I mean, you know, just in our lives, right? We've all come up to something and been like, oh man, I'm gonna do this and it's gonna be the most amazing experience of my life. We do it and we're like, oh, okay, like it wasn't as good, right? That's what's happening in these earnings, right? So when the stock is vertical, it opens the door to a disappointment, which then can come in the form of like what we're seeing in Roblox here. So going back to the chart, we can clearly see again, look straight up here, and the stock literally flushed all the way down to about $50. There's a big support here, also at around 48. So that'll be something I watch. And then right here, this gap fill, more as a swing trade. This one would be a swing trade at 43 for me that I would keep a very close eye on. All right. Also, Ralph Lauren up in the pre-market here. This stock is moving up. This is one, by the way, that I'm intrigued on a short basis, and I'm going to show you why here. This is a great one here. All right, so this kind of fits my criteria for the parallel channel gap above that fades. And what we could see is if we take this line and we draw a parallel, and then we bring this down, what's the high end here? This is right around 177 to 178, right? Well, if we flip over to the pre-market data, it's trading, and we can see it right here, it's trading above that. So it's not that far above it in all fairness, but I would not be surprised if it gets pulled back in. And using that same methodology, did the stock rally up significantly going into earnings? Yeah, I mean, it pulled back here a little bit, but it's at basically all-time highs up here, and that means expectations were already high, which opens the door for a profit-taking entry or sell-off into the open or at the open. So watch that one closely. I think it could be a good pullback candidate in the intraday today. All right, so listen, earnings galore here. This is always what we want to focus on, the action in the markets. The game plan is not so much, remember, the reason I do the game plan on a daily basis, Monday through Friday, is because it's more of actionable information, data-driven levels that are good for today or maybe an outlook for the next week or two. All right, I'm not going to sit here and say, hey, in 10 years, I think the S&P is going to be here. Doesn't do us much good, right? I mean, there's so much time in between. There's so many things that can change. On a daily basis, we're getting new tidbits about tariffs or about Gaza. I mean, there's just so much going on in the world. But what we can control is the charts and the probabilities and the data, which is what verified investing is all about. All right, let's get into Bitcoin here, guys. I wish I had more exciting things to say on Bitcoin. Sometimes I guess no news is good news in that sense, but we all like action. If you're a trader like me or a swing trader, you want to see action. But really, what are we seeing here? We're just seeing this continued chop in between here. Again, we know our support level and our resistance level. Now, originally I was saying, all right, there's a level between 108 and 111,000. That was when we were over here and these two lines were very close together. They are slowly diverging more and more, right? So now they've really separated into two separate levels. So this one's again around the 115 level, and this is still 108 to 109, right about around that high pivot. So those are your two levels. If we get through 108, we probably test 115. If we get through this 92 level, notice how many times it's hit this. Really remarkable. 1, 2, 3, 4, 5, 6, 7, 8 times in a row. What do we know about that? It tends to weaken the chart level. So if it does come down and retest, I actually favor a break at that point. Now, if it doesn't retest, then it doesn't, test that level to break it. But if we do come down again, at some point, we're going to get that bigger move down. Vice versa, we've tested this high only 2 times. But again, if they're able to push it up, maybe you get a small check back and then finally a breakout. I do think the the path of least resistance eventually is to the upside. It's just more of a matter of when does it do it. Does it have to correct bigger first? Does it have to flush out weaker hands back to the 70,000, 75,000 range? Or can it continue to grind higher? Again, longer term, I think it's going higher. It's just what it does in the short term as I am a trader. Okay, next up, let's take a look at gold here and see what we have on the gold chart. Gold is getting a small pullback today. I think we can all agree after such a massive multi-day move up, it's due for a pullback. We've seen the miners get such a big move here. Take a look at the GDX here, right? So the GDX, look at this rally from $33.50 all the way to 41. Percentage-wise, that's an amazing move. Now, what you're looking for on the GDX here is basically a retrace, right? So same thing with gold. If it comes here, that could be your next stepping point for a move up as long as it holds this level here, which was this former support level. Going back to gold, we have the same sort of methodology there, right? We've confirmed above this level, which was your former all-time high. So on a technical basis, this now becomes major support. Major support does not mean it can't break. It means the probability of breaking is lower, right? And the odds would be this type of move on gold. Silver was attacking that resistance level once again yesterday. Look at it getting rejected right there. This is a line I've talked with you guys about over and over again as resistance. So far, it hasn't broken. We're going to watch now. Does it build a bull flag and then break out, or does it get rejected back down here to that $30.80 level? Oil, which came back into the key support yesterday, is getting a small bounce today. Again, I'm not in a position here anymore, so again, I have to wait patiently for the next setup to form that gives me high probabilities and data to make a decision. And then natural gas, lastly here, folks, if we take a look here at nat gas is basically flat. But the positive thing for nat gas here for us as traders is that you have this down move that broke. We broke support when we confirmed. Could we be doing this back to the scene of the crime of the breakdown, right? So this was support, breakdown and confirmation, retrace, in which case there might be, if we continue to consolidate into this level, there might be a short on nat gas off of that level. All right, guys, so listen, when all is said and done, my job here for you guys is to educate and make sure that you guys are aware that there's other ways to trade and invest that basically don't rely on emotion, right? You want emotion, go to Wall Street Bets, go to, X, all those places where you're going to have people pumping and saying crazy things. I'm more of a realist, and part of that is just trading for so many years now, on my 26th year of trading, is that I tried all that. And I always got crushed. I mean, the amount of money I lost in my early, thank goodness I didn't have a lot of money, but for me, it was massive amounts of money trying to figure this game out. And I'm sure many of you guys out there can sympathize. I'm sure many of us have been through that. Now, it's not to say I still don't take some losses. I certainly do. You can see the track record show that. But ultimately, the key is, can I win more than I lose? Can I make money versus losing money? And as long as I follow the charts, I generally make more money more often than I lose. And I guess that's the point here. The point is that the institutions use data, so why do investors use their buddy's tip or the emotional, pumping of this going to $1 million price target? We have to emulate the institutional action. They have it figured out. They have way more money than any of us do. They're using it to make way more money. We have to go towards that side. So I guess that's the moral here, is that shut out emotion, focus on data. In Verified Investing, we'll do our best to always bring you that data, unbiased. This is the probability. This is what most likely is going to happen. But it's also important to understand that it won't always. Probability means that, let's say you have 70% chance. That's great probabilities. Still means 30% of the chance it doesn't work. Have an exit strategy as well. Always know your levels. Always know your risks. Always know your rewards. All right. Thank you guys so much for tuning in. I'll be back tomorrow on Friday for the next game plan. Take care.